Nedbank posted its first half numbers today, posting a 26% increase in first half profit, boosted by a recovery in Ecobank Transnational Incorporated. We do have Nedbank CEO Mike Brown in studio for more. Mike, thanks so much for your time. I mean, your results show that it's pretty good to be in the banking business right now. Is that an accurate description of what you're facing operationally?
Well, I think our results really show two different stories. What we have is the first half of last year, we had a really tough time with our 20% investment in ETI, and we had to account for some of our share of some of their losses. In the first half of this year, they've returned to profitability. So that's given us a big boost to growth. So that's certainly very positive from a Nedbank overall point of view.
Sure.
And then here in South Africa, our businesses have grown a little slower, probably somewhere around about 2 or 3% in a very slow growth economic environment. So you put those two together, you get the 26% earnings growth that you spoke about earlier.
Right. So let's focus on ETI for a quick moment before we bring it back home. You took quite a bit of action there to improve the financial position and governance. Walk us through that, and also the sustainability of ETI's financial position going to the year ahead.
Look, you know, hindsight is a wonderful science, but we made an investment in ETI several years ago when the Nigerian economy was growing at 6 or 7% and oil was maybe $90 or $100 a barrel. And very shortly thereafter, oil fell to a low of $28 a barrel and the Nigerian economy went into recession. And Nigeria is a really big part of ETI. So their operations in Nigeria, as a consequence of that, went through a very tough period, and that exposed some weaknesses in their risk management environment. So actually their management team and board, and Nedbank has representatives on their board, have worked really hard to try and fix that. And now they've also been helped by increased growth in Nigeria, the oil price back, you know, above $70 a barrel. So a much better performance in Nigeria, as well as some self-help in their own risk management environment, I think has given a sustainable boost to their performance going forward.
So generally you're feeling good about that investment for the rest of 2018?
For the rest of 2018, yes. You know, clearly risk still does remain in that environment, but they've already published their first half numbers. We account for them a quarter in arrears. So actually their second quarter we'll only account for in our third quarter. So we already know that our third quarter is another profitable quarter from ETI, making it 6 profitable quarters in a row now.
Sure. Mike, let's dial back to December, because December is when everybody was abuzz with the turn in the political front, some restoration of policy certainty with the appointment of President Ramaphosa at the top of South Africa's throne. Everybody was happy, but fast forward a couple of months on, 8 months to be exact now, some of that cheer has faded. And I'd like to know operationally for you on the ground, how has your past 8 months been?
Yeah, so I think we also saw some of that initial cheer, and operationally that translated into some quite strong growth in what we would call our global markets or trading activities. So they had a really good and strong first quarter. And then as we got into the second quarter of the year, I think really what happened was the reality of the long road ahead for South Africa became more apparent as we try and fix some of the institutional challenges that our country now has and the complex political turnaround that the president has to lead within the ANC. And off the back of that, we saw a slowdown in trading activities in the second quarter. And then if we look at our lending businesses more generally, we've seen slow loan growth in our wholesale environment. So corporate South Africa, still a little bit of a wait and see attitude as we deal with issues like land reform, the mining charter, Eskom. All of these issues need to be much more, you know, forcefully dealt with in the short term for confidence to sustainably improve for wholesale South Africa. And on the retail side of our business, we've actually had reasonable growth, 5 or 6%.
And I mean, the retail side, if we focus on that, you're now at 8 million customers or so.
That's right.
How are you achieving this in an environment where every bank is vying for increased market share? What are you offering your clients?
So I think essentially it comes down to offering good customer value propositions, good service, and great digital products. And we've invested significantly in technology at Nedbank over the last few years. we probably spend about 2 billion rand a year on new technology. That's not just running the bank, that's building new products and systems to serve our customers better. And a great example would be the Nedbank Money app that we launched at the back end of last year. We've had an app for 10 years or so, but we launched a really good app at the back end of last year, and we've had more than 1 million downloads since November last year on the Nedbank Money app.
And of course, Pippa, it was introduced to our screens. I'm wondering, have you had a performance appraisal for her yet? How's that been?
Yeah, no, Pippa's very easy to give a performance appraisal to. The increased conversation was really quick. No, essentially Pippa really is a symbol of the digital journey that we're on at Nedbank, and we're using Pippa in our branches as a bit of a gimmick to try and explain to people, more deeply about our digital journey.
Sure. In international media, they've been writing that analysts that are invested in banks, when they're on those calls and they're speaking to their CEOs, they're asking more and more questions about how banks are dealing with the threat from big tech companies, the FANG stocks. And I'm interested in your view and how insulated or protected is Nedbank from a likelihood of Amazon or your Alphabet now looking to a new growth area in banking and financial services?
Yeah, I don't think anybody's insulated or protected. Your only form of insulation or protection is to continue to invest in your own digital and technology products and to make sure that you provide your customers with such great service and products that they have no reason to move to any competitor who comes into your space. And that's certainly what we focused on doing.
Update on VBS and how that's going in facilitating the payments to some depositors there?
Yeah, so we were asked by the Reserve Bank and the curator of VBS. They went through a selection process where they looked at the various products of banks' geographical representation in that particular area, and they decided that Nedbank would be the best bank to help those retail depositors who'd had their money effectively frozen or trapped inside VBS to help them access their guaranteed deposit, which was made up to a level of 100,000. So since then, we've been able to open 17,000 new bank accounts for these people at Nedbank. Those accounts are all loaded with the same balance that they used to have at VBS, with a cap of 100,000, which is the guaranteed amount. And the last data point I saw is that somewhere between 3,000 and 4,000 people had come into the Nedbank branches, had activated their accounts, and were now Nedbank customers, able to access their money again. And really, most of that money has still remained with Nedbank. Generally, what people really wanted to do was see a piece of paper with a Nedbank brand on it that said their money was safe. And we've been, I think, extremely fortunate to be able to be part of a process of helping people in their hour of need.
Mike, you're guiding for a quite strong growth in the year ahead. I think it equates to around 10% or so, according to one of the analysts I chatted to. What will drive that growth? And I ask because we do see the economic numbers in South Africa on a daily basis, and things are not really looking good. Yeah.
So effectively what we've said is we expect to grow more than CPI plus GDP plus 5.
Sure.
CPI is likely to be around 5%, GDP around 1%, and you put 5 on top of that, so greater than 11% growth for the full year. And bear in mind, we've grown 27% in the first half, so we've got a really good start for that over the balance of the year. What we would expect to happen in the second 6 months is that our managed operations will grow slightly faster than they grew in the first 6 months. Bear in mind, those grew 2% in the first 6 months. So we'd expect slightly better growth from them in the second 6 months, particularly areas like corporate and investment banking, where the round 4 of the renewable energy deals all closed in July and August. So they were all in our second half, not in our first half. So slightly stronger growth in managed operations. And then the impact of ETI going from a loss to a profit will mathematically become smaller over the full year. And if you put all of that in a model, you'll get greater than 11% growth for the full year.
All right. And impairments, because I did see a slight uptick this time around. What's the outlook there?
Look, right now, our impairments are at very, very low levels, indicative of a very high quality advances book. Our credit loss ratio was at 0.53%, and we expect that over time to be somewhere between 0.6 and 1%. So, we would expect that it will still go up a bit from here, but we expect it to remain below 0.6.